Hello and welcome to our monthly market outlook for December 2021. We are in the home stretch of the year. Can't believe it. Not sure where this year went, but we are here nevertheless. So I've got with me our two options masters, Mike Carr and Chad Shoup. And we're gonna stick to the usual program today. Chad is gonna show you what sector is on his radar this month. He's gonna do a deep dive on it and show you any individual stocks. We'll review what happened last month, and then Mike will give us an update on his big picture outlook for the S&P 500 and anything else that's on his radar today. So guys, before we get started, I do just want to give a shout out to our readers. Our goal for True Options Masters this year was to reach 100,000 subscribers, and we have hit it, baby. We still have a whole month left of the year. So just a big thank you to our readers. Thank you guys for signing up for True Options Masters. If you haven't subscribed to our YouTube channel yet, please do so now. You should be able to do that right here on your screen. Like this video, add a comment if you like what you see or have any questions that you want us to cover in future videos. And we'll go ahead and we'll just jump right into it today, guys. So Mike, why don't we just hand it over to you first?
Okay, let me bring up some charts. And what I want to start with is just a quick look at the S&P 500. We're still above that 50-day moving average. Now what we're seeing here is just a pullback. It's basically mean reversion. So at the bottom, these black lines show the distance from the moving average. So it's high here, and then of course it's negative here. The blue line is a moving average of that distance. So as we see, while the SPY was rallying strongly, we were basically just reverting to the mean. During that last pullback, we fell significantly below that moving average, and then we got back above it. What we should see now is some period of time close to the moving average. That tells me we're likely to see a little bit of a trading range before we get a significant breakout. We're still entering December. December is a strong seasonal month. Now, it's the first year of the presidential cycle. Biden took over in January. First year of the presidential cycle, December is up 88% of the time. It's a strong omen. So seasonal's definitely supportive of higher gains. Now, speaking of presidents, Harry Truman was not a big fan of economists, and he said once he wanted a one-handed economist, because every economist told him this will happen, but on the other hand, this could happen. So I'm going to do a two-handed economist story here, and SPY still looks bullish. IWM, a concern. We cut below the 50-day moving average, and that's a concern on this particular index here. So here's the 50-day moving average, and here's a trading range. That blue rectangle highlights a trading range that defined 2021. We had a breakout. That was very bullish. Then we had Omicron, and we had that strong pullback. We are right at the 50% retracement of this trading range. If we fall into the lower half of that, we're going to see technical selling pressure in small caps. Since small caps make up such a large portion of the stock market, that is going to pressure the other indexes. Again, bullish factors, we should be bouncing off of this level, but we're at a very important level in SPY. If we were to fall below 220 on SPY, that would change the outlook here. For
IWM.
I'm sorry, IWM, you're correct. So if we fall below 220 on IWM, we have a reason to be concerned. As long as we hold that on a closing basis, we should see strong gains into the end of the year.
Okay, so broader market is looking strong based on presidential cycles in the past, 88% chance that December is a strong month. IWM, however, smaller companies within the market. Looks like it's at an inflection point. So we'll watch that over the coming days, see what happens there. I'm sure we'll have Mike Merson probably cover that in one of his chart of the days if we see a important update there. You got anything else, Mike?
That was it for this month.
All right, we're going to get through this one pretty quick today, guys. So I do have a question for you, Mike. So, obviously we see this Omicron scare. Is that how you pronounce it? I figured it was Omicron. I could be wrong.
I don't know. I've read it. I haven't watched the news in a few days.
Yeah, but so obviously we saw a scare last Friday, and I get it. I mean, I think just psychologically, people were just like, oh my God, another variant. Like we're just tired of this. And then of course on Monday this week, markets were back up. It was a little surprising to see so much fear and doom and gloom on Black Friday, however, because, as you say, going into the holidays tends to be a pretty good time for the market. So, what do you think? You think that while we're kind of still in a bit of fear and doom and gloom from the Omicron recent scare, I think it's a pretty good buying opportunity, you'd say?
I think so, and it's long forgotten now, but after Delta, which was another variant of the coronavirus, we were told that there was going to be another variant which was even worse than Delta, and that was called NU. And that turned out to be a non-issue. Omicron, however we want to say it, is likely to be less than we fear. People are going to get sick and there's going to be tragedy associated with it. And I'm not trying to minimize that, but there aren't going to be economic shutdowns. Powell is out. We're recording this on Tuesday. Powell is testifying in front of the Senate. He released his remarks last night. We're seeing the typical Powell shuffle. Powell says things that send the market lower in his press conferences all the time. And you could see him watching, I think he has his phone right there on the podium, and he's watching the ticker. And every time the Dow drops as he's speaking, he tries to say something reassuring. So he's going to go out there in front of Congress today. He's going to deliver his prepared remarks, and he's going to use those questions as an opportunity to boost the stock market because he knows he went too far in his comments. So that's what I'm watching for, is Powell to save the economy.
It is very spooky, the power that these guys wield sometimes, but it is what it is. Maybe we should create a trading service around Fed reports and other shenanigans that they say. I'm sure there's probably
all very short term. That's the Wall Street guys are all over that one with the high frequency trading because
we can just
short-lived.
Them then we've got better ideas over here anyway. So, all right, Mike. Well, thank you for that update. Definitely good to hear an optimistic outlook going into the end of the year, and I know you've got an even more bullish outlook for the next couple of years. And we can do a larger recap of that in our first monthly market outlook for 2022. So Chad, before we turn it over to you, we finally launched Fast Lane Profits this past month. We saw a pretty good response from our readers. Do want to thank everybody who subscribed to that. And Chad, I know you're going to give us another update on the relative rotation graph. And obviously, if people like Chad's analysis using this profit radar, just keep an eye out for the next time we open Fast Lane Profits. Up to you guys. We still have some spots left. So just keep an eye on that. So Chad, go ahead and take it over.
All right. Thanks, Chris. Let me pull up my charts here that we want to look at the sector. But just as far as my comments too on Omicron and all this, I kind of agree with Mike that I'm hoping that it's overblown right now. And when you hear even President Biden speak and some of these other countries, they don't want to go back into this lockdown. And that was the big thing that triggered the sell-off that we saw when the pandemic started, was the economies were shutting down. So that sparked a massive sell-off. And then they even rebounded from that, even as the economies were still closed down. So this time, I don't think we're going to close the economies down. Everything's still growing. So I think it's a dip, it's a correction in the market, but ultimately should be a buying opportunity. So last month here on our profit radar, well, first, just a quick recap of the profit radar, because what we look for with these sectors, and these are sectors in the S&P 500, and they rotate around the S&P 500, which is basically at the dead center. So we look at the relative strength and then the momentum of that to get these four quadrants of rotation around the S&P 500, where they go from leading, which is in the top right, to weakening, then to lagging, then back to improving, and all the way back to leading. And as we scroll through, this is going backwards, but as we scroll forwards through this, you can see that these indexes tend to go through this rotation. And I added a new one today. You can see XBI, that's biotech industry, the biotech sector. I added it just because of all the stuff that's going on with Omicron and the healthcare industry. And looking at where it's at today, as we go back through this rotation, it's way down here deep in the lagging. So it's way over here. That's biotech. That's not going to be our sector that we want to actually jump into for this month, just because of where it's at today. Now, this could change in the next few days, but since it is still heading lower in the lagging quadrant, which means that it's lagging, means that it's trailing behind the S&P 500. So these are underperforming when they're in this area, and we're looking for them to turn around and head higher, because this is the rotation that we just see naturally takes place. So biotech's going to be a hot sector here in the coming weeks. It hasn't turned yet, so it's not going to be the one that we're jumping into today, just one that we want to have on our radar. But for the sector that we actually like today, it's going to be energy, because it's actually the only one heading kind of in this north. Still going a little bit northwest, but it's heading towards the improving quadrant. We see financials right here beside it. They were headed that way, and then they took a sharp dip once we had the crash on Black Friday. Just a pullback. Once the markets dropped a few percent on Black Friday, it was enough to send this headed back the other way. And from last month, just a quick recap is that we were in consumer staples. So that's XLP, this line through here. And you can see that it started to head through. I can go back a little bit to show you where it was down here in the lagging, went all the way to improving, started to head towards leading, and then kind of got a setback and drifted sideways from there. And that was kind of the story for the whole market in the month of November. It was basically a flat market, didn't really take off. But early on, some of our trades were still heading higher, like Monster Beverage. I think, Chris, you mentioned you made a gain in that one earlier on. And then
yeah, so let me just interrupt you real quick, Chad, because I'm pulling up XLP here on my Robinhood account. And on November 2nd, I bought 4 contracts for $1.03, so $412. I sold 3 days later for $692. So I made almost $300 on that trade. And then, yes, when you went into XLP to look at some of the best stocks, I think I bought options on a few of them. I can't remember which ones all I did, but I did buy Monster. That was one of them. So same time frame, November 2nd, November 5th, I bought for $510, and I sold that one for $900, almost $400 price there. So for everyone watching, Chad's about to reveal what stocks he's looking at in energy. So maybe pay attention, maybe write a couple of them down, consider buying an option on them that expires, maybe first expiration of January, maybe January 15th or something like that. Could be an opportunity here. So didn't mean to interrupt you, Chad. Just want people to understand this stuff, insight you give away for free can be very profitable.
Yeah, I mean, this is just, these natural kind of rebounds as the market goes through this lagging area and then improving. And here you can just see that when we were jumping into this at the first of the month, it went through a short-term rally here in consumer staples. And that's tend to what we see. It didn't play out all the way to the leading. You can see that in the weakening, and we saw this on the profit radar just behind this. We saw that the XLP, it kind of flatlined here in the improving quadrant, and we see it on the chart too. It just kind of flatlined once it got into improving. It didn't head all the way to leading, so we didn't see the big type of gains that we'd want to, but there are still ways there to make profits, especially in the short term. All right, let me get rid of that and go back to.
And Chad, you said energy. Now, this was one of your sectors to watch maybe 3 or 4 months ago. So maybe we can go back and just look at the cycle that energy has followed, because I remember a few months ago it was in the improving, and then it went into leading, and now it's back up for another setup.
Oh yeah, well, this is a daily chart. So if we're talking months, this is going to make, this is a 1 year chart up top. So we'll just start at the beginning, but you can just see, we can also, to make it a little clearer, and it should track as we go through it. Yeah, so can you see this yellow line?
Yes.
So that's where we are on the profit radar. As we start going through this, you see the yellow line moving. As we go to leading, improving, you can see it heads higher. Then once it gets up in leading, you can see the stock down here drift lower. So it's two things to keep up with here, but as we rotate through it all, you can see that now it's going through the rotation again, heads down the lagging. Now it's already improving. You see it turns higher and lagging, headed back up towards the leading quadrant. So that's kind of the rotations that we look for. And then you can see on the price chart, it's going to continue heading higher once it's in the leading quadrant. So it continues to shooting higher on the rotation graph as well. So this is basically all we keep trying to replicate as we look at these rotations that it goes through. And then once it starts to flatline up here in the leading quadrant, things are slowing down on its price chart. So they go hand in hand basically in the movements that we see. And it just gives us this early, basically momentum indicator down here. Once it starts to turn higher, to start jumping into these different sectors. And then we use the same type of rotation when we break them down and look into these stocks.
And just following along with the price chart here, as you went into improving, it started going up. As it went into leading, kind of went up a little bit more, started stalling out. And again, red, lagging, it's going down.
Yeah, I mean, you can see why when it's in the lagging quadrant and heading down, we don't really want to mess with these stocks or sectors because they can drop sharply fast. That's the case for moving lower in it in the first place. Drops come kind of quicker than the rallies. The rallies tend to play out over weeks. The drops can happen in just days. So once we see that thing heading lower, we want to avoid them.
Yeah, and this was the one that you called a few months ago. Yeah, and I remember you were telling us to keep an eye on energy as the Delta variant was coming up. And I was telling you I was skeptical because I was like, I don't know about that, Chad. I mean, that could be really bad for energy, just like the original variant was. But sure enough, it followed the path just like you said it would. And so here we are again.
Yeah, and that's the thing too. When we look at short term, when we're just talking about weeks, these new variants could be bad for energy sector. But it doesn't mean that these short-term moves that we're seeing take place, that they're going to have an immediate impact. A few months from now, maybe whatever falls out from this variant, whatever countries are shutting borders or anything like that, maybe that does have an impact. But right now, it's really not having an impact. And we're looking at this sector to head higher. And you can see on the price chart too, that the XLE just made higher highs too. So now it's got a little bit of a pullback. We're looking for higher lows and then for it to head higher from there. Now, as we break down the energy sector, though, to look at the stocks that we want to place, actual maybe trade on or look for options on, there's not too many energy stocks. So it's a little easier that when you take a look at this, you can probably see which stocks are in that sweet spot, as if you want to call it, that we want to look for them to make that rotation headed higher. So they're going to be the ones down here on the bottom left. And the further we are away from the center, the more volatility we're seeing, the more movement in the stocks. Because the center on this one is the energy sector now. So we place the energy sector at the center and we look at the energy stocks, how they're rotating around that. And if they're around the center, then that just means that they're moving basically right along with the overall sector. They're not seeing big moves ahead or big moves down. They're just kind of trending around the same speed as the energy sector. So as the further out we go.
Yes, which stocks you're going to recommend we take a look at?
Yeah, Chris, you can take it.
Okay, so from what I can tell here, so we want to see something that's in red and starting to head north. So I'm thinking, MUR might look good, but it's so close to the center, it might not be volatile enough to see movement. So I'm going to think maybe HAL, RIG, and maybe NOV.
Yep, and those are the three stocks that I like.
Boom.
For today. And
see how easy this stuff is, guys?
Once you have
and it's amazing that this works.
It took a lot of time doing the research and testing to make sure that these actually play out like they do. But then just going through it all and you see how many times that once they hit these points, these turning points, and they continue to at least see short-term rallies, if not, the full extension going all the way up to the leading, they make ways for big gains ahead. And you can just see this is NOV, formerly known as National Oil Well, Varco, but the big crash here for the stock, a big drop in the lagging, and now it's telling us that to expect it to turn higher. So we're looking for these bounces, these rebounds, as the energy sector as a whole is expected to head higher based on the S&P 500. So it's kind of a two-part trade where we're expecting the energy sector to improve. That's kind of the baseline for this. And then we look for these stocks to just continue this rotation here and Howe, Halliburton, Rig, Transocean, and NOV. And then there's one way down here. This is HP.
Wow.
American Pain, but you can see it's headed lower. It's not showing us any signs of turning around yet, so you don't want to mess with it for now.
Can we see that price chart? I'm just curious how much that stock has dropped.
Yeah,
wow,
just
that's a really precipitous
sharp drop.
Wow.
Yeah, big sharp drop too.
Yeah,
it's
30 almost.
I mean, it looks like the same. Yeah, it's at 30%. It's kind of the same type of move that we're seeing, but it's a steeper drop than the other ones. Same pattern it's playing out. They're dropping, but these were shorter drops and they're starting to rebound from here. That one's not showing the same signs of life.
That HP is in the dead zone, let's call it.
Yeah, I mean, for now, it can turn higher at some point, but yeah, you want it to get all the way back to heading basically northeast before you jump into this one, because they can bounce a little bit and then head lower. Absolutely. That's why National Oil Well, or NOVs, kind of it's further out here, but it could take a little bit longer to turn around. Halliburton's kind of the best play based on where things are sitting at on this graph, because it's already heading directly towards the improving and even, a little bit to the east to the leading quadrant. It's already made that.
Right to call this the sweet spot, Chad, because it's far away enough from the center that it's going to have enough volatility to drive momentum in the stock in our favor. They're moving north, so they look like they have a very good chance of escaping into the improving and then eventually leading quadrants. Whereas HP is just so deep in the red, it's going to take a lot of movement to get it to somewhere that we could consider, safe to trade. Yeah.
Once they're down that far, it's a volatile stock, that's for sure, but it could bounce 10% before it even makes this turn higher. And then at that point, it's at risk of another pullback. So it's a little bit too volatile, I guess. But that's all I have for today, Chris.
Okay.
Just taking a look at these energy stocks and these three to have on your radar.
Let's bring some of this together, guys. And Chad, you can go ahead and close your screen if you want. So Mike, you're talking about seeing bullish activity in the S&P 500, potential selling in the Russell 2000, and Chad's showing, byness in energy. So Mike, I'm just going to make a hypothesis here. In the Russell 2000, we'll see stuff like new energy, some smaller electric vehicle firms, hydrogen and stuff like that. Whereas Chad's showing potential bullish activity in energy. I think that there might be a connection there.
Yeah, just to clarify, that's the line in the sand, so to speak, in IWM. 220, we should be seeing a bounce. If we don't see the bounce, then we do have a rotation likely into the old economy, utilities and energy likely to shine. If we fall below that 220, because it'll become a more defensive market.
I think that's a really good way of putting it. 2020 was obviously very, very bullish for the new economy. And whereas I think this year was really, for the overall health of the stock market, the way I look at it is we gave, the new economy gave the old economy a chance to catch up, which is healthy for the overall stock market. You don't want things to diverge too far from each other, because then it just creates these rifts and things can start to collapse. But I do think that it's interesting. And Mike, since Chad showed sort of his watch list stuff for the month, I know when readers see this, yesterday you published your two recommendations for December. And I believe one of them was the Russell 200, which is growth. And there was one other, I'm blanking on what it was.
It was XSD, which is semiconductors.
Okay.
So the Russell 200 is the 200 largest stocks in the 2000. So it's a larger cap index.
Correlate more or less with S&P 500 or?
Correct.
Okay.
Correlates with S&P 100, S&P 500 type market action. And then we're at the growth sector. Those are both the leadership right now. Large cap growth is the leadership. Semiconductors are probably the key to unlocking the supply chain mess that we have. Semiconductors are needed in a lot of the supply chain shortages. The companies are expanding their output to the max extent possible. So they're going to be generating more revenue. They're also raising prices. So they're kind of in the sweet spot to benefit from this.
And you're just thinking about energy again, obviously with this global supply chain issue that we've had, how do you think that energy plays into that? Do you think that with rising, oil prices, do these things kind of tie in together?
I think it goes back to what Charles Dow noted in the late 1800s. Dow theory holds that, the industrials and transports need to move together. And
right.
When there's a divergence, it's a sign of weakness. The transports are the energy sector still. I mean, we can look to solar and electric for the future, but for now, oil drives the economy. And if the company is going to make semiconductors, they need trucks pulling into the front and pulling into the back. And then they manufacture, and trucks need to be waiting at the front to move that product to customers. So energy is going to benefit as we recover from this, no matter how you look at it.
I think so. Yeah. It just seems like all of this stuff that you guys are, it's funny because you guys have these independent conclusions that you reach, but I find that they often end up complementing each other.
I think so.
Okay. Well, this is the last month of the year. I'm sure we're going to have a longer update for January 2022. Mike, next month, I'm probably going to ask you to give us another big picture update on your big prediction for S&P 500, still more or less doubling from here in the next 2 years. And with that said, I don't know if you guys have any final notes. Just want to wish our viewers and our readers, some happy holidays, Merry Christmas, Happy Hanukkah, whatever it is that you celebrate. This is obviously always a fun time of year. And as far as the market trends go, I think what Mike is saying is that the trends we've been seeing this year are going to continue through the holidays. So maybe you can make a couple of good trades this month and pad your pockets for some extra Christmas gifts for friends and family. I know that's certainly what I'll be trying to do. So with that said, I just want to sign off, wish everybody a good week, a good December, and we'll see you guys back in 2022. Mike, Chad, thanks again.
Thank you.
All right. Thank you.